welcome back. And today I'm really excited to see all of you here today because we are starting something brand new, day one of something super brand new. And while I'm speaking to you, I want to make sure I turn on all the various tools and platform out there and make sure we are well connected. All right, so let me set this up right now, and I'm going to give you a quick explanation of how we're going to get started. So here we go. If you are watching us from YouTube, Facebook, Twitter, LinkedIn, as well as those of you watching us on TikTok, I hope you are catching us live right now and really excited. First time we are streaming live on, this is not the first time, it's the second time we are streaming live on TikTok, and we are still working out some of the technical details, right? Now, before we get started on today's presentation, I want to update you guys on what has happened last week as well as this week. So last week, we have the major FOMC announcement of the interest rate hike, and today collectively we're at 3.75 to 4% of the interest rate. And then I spoke and delivered the keynote address on last Friday at the Spiking Alpha conference. And I hope you guys enjoyed the Spiking Alpha conference. We came out with like a very powerful theme of be strong. And of course, I shared with all of those who took part in the event 12 amazing stocks. I'm talking about 12 amazing stocks, right? And these 12 amazing stocks captured in this word called CEOs fly ahead. So for those of you who are part of our Don't Stop Believing trade notification, we'll be sending out to you the WhatsApp notification tonight of the 12 different stocks that we play. But if you want to watch the analysis behind the 12 stocks, then what you really got to do is to watch the recorded video on the Spiking Alpha conference. All right, so watch out for that. And if you need help, just simply drop us a WhatsApp message to our angels. Now, we took quite some time for a break, and then today, finally, we are back, and I want to welcome back those who are joining us once again. And I turn on my chat, and let me fire off the very first message. Wow, great to be back. Welcome back. Okay, so let's see who is present with us here today. And I see welcome back. I see Benjamin, Peter, Christopher, Daruvala, and Christopher Lee. I see John. I see Manfred, Adeline, Elgin, Peter. Thank you very much for joining us. All right, so I'm sure you guys are hearing me loud and clear. Okay, so very good, and thank you very much. If you guys are hearing me loud and clear, just let me know on the chat, and I make sure you are live on the stream. Okay, so here we go. Are we all good on the mic? And then we're going to start our class here for today. All good, and let me just test one more thing, which is oh, sounds good. Right. Up. I think it's good. Okay, good. So let's get started for today's class. Oh no, my sound is bad again. Not good on the mic. Wow, not good on the mic. Okay, let me check. All right, maybe I selected the wrong mic. Hang on a minute. Mic. And how about right now? Is it better right now on the mic? And just give me your feedback, and I can still do some adjustments before we get started. How about the mic right now? Okay. Good now? John, I see John. Okay, so the mic is very good, strong, powerful right now. Yes? Okay, now that's one of the... So I got quite a number of things set up on my table right now. We are all getting ready, to go on the TikTok. So thank you very much for your feedback. Okay, so we are good. And today is really important week. Start of the week, as you know, we are entering to the midterm election. And of course, this Thursday, we're going to have the inflation data being published. Quite a lot of stuff for us to do. And again, this Thursday, we're going to have our cozy live trading event. All right. So make sure you guys are really catching up and don't fall behind. Okay. So I'm going to switch off the chat right now and I go straight into the class for tonight. So today marks the first video of the new series. I call it the best investing strategies for inflationary times. And as you know right now, the biggest monster that we are actually fighting is the high inflation rate not seen in the past 40 years. So I really gone through at length at the keynote address during the Spiking Alpha conference to really kind of mark out starting from the year 2000 until this year 2022 and then pan out into the future. What would the future look like, sound like, feel like, trade like, and how profitable would it be? We've gone through that whole journey at the Spiking Alpha conference. And I say, hey, if we were to redo the YouTube series, how should we angle the way I select and curate the topics to share, and then you guys can benefit from the sharing. All right. So that's the reason why my key focus right now is really tackling the inflationary times. This will probably last for the next 12 to 18 months. And already, there's some data that's coming in really fresh right now that is influencing our thinking. So let me show you right now the first data point that we have to consider, and it goes right here. Here we go. Midterm election, and while we are in the midst of it, there's already kind of a like crazy amount of information and misinformation going out. Trump and other Republicans are already casting doubt on the midterm election. Live updates: more than 40 million ballots cast early, and Clinton Sanders rally voters. Biden adds events to bolster vulnerable Democrats ahead of midterm. And I think the Democrats are going to take a serious beating. I don't believe that the electorate will vote for the Democratic Party. Everybody is in pain right now. All right. So I think he's going to take a severe beating in this midterm election. But anything goes for election. The very last minute, somebody pulls a trick, pulls out a scandal. Anything could happen, right? So this is the nature of politics. But what should you do right now between today all the way to Thursday? And that is more important. In fact, I will highly encourage you guys to be very patient. Tonight, I'll be sending out the 12 stocks that we played at the Spiking Alpha conference. They are the most suitable for inflationary times. We presented the thesis behind it. It's like a very long conference, 3 hours long, man. All right. So you should do well to go and watch the entire video recording. Now, this is only for those who taken part and sign up as our participant. Only for those who are in the Don't Stop Believing trade notification. You will know the 12 stocks, but the analysis part, you got to be a participant of the Spiking Alpha conference. I want to make this very clear, okay? Now, we are looking at a midterm election. So between Monday, Tuesday, and Wednesday, my message to all of you is hold your fort. Don't panic. And already there are some telltale signs on last Friday, all right? I think these are very good telltale signs. The market start to rally, all right? So hang on in there, because the real result that Wall Street is watching for is not the midterm election. Midterm election is a component of it. The real weightage has always been on a CPI data, consumer price index, or the inflation data itself, all right? So the inflation data, right now we combine with our thinking behind the terminal rate of 5%. Here we go. This is the real thinking. And this thinking should shape the way you, I realize my image is kind of a flip upside down. Let me do something here. All right, let me just press this. All right, I'm back to normal on TikTok. Or else you guys are reading me like mirror image, all right? So what I'm trying to say is, first of all, the terminal rate of 5% is a very scary terminal rate that we are thinking about. And we kind of give you guys the time zone, the red box and the blue box. The red box and the blue box will be the maximum pain period that we have to go through before we hit a terminal rate of 5%. And from that point onwards, we believe that there will be an interest rate cut instead of expanding. And hopefully we go on a very, very hard landing. Don't tip over into recession, but many of them already say technically we're in a recession. But that is the game plan, right? So I've given you Tuesday. I've given you Thursday. Tuesday, midterm Thursday is the inflation data publication at 8:30 a.m. Eastern Standard Time. But today, can all of you please do something? Go and check your clock. The market has right now adjusted fully to the daylight saving time zone. All right, the market has been adjusted already. So go and watch right now. The market will open exactly 20 minutes from now. All right, and I kind of like this daylight saving time zone, this switch, because it gives us more time to go and really do a proper analysis rather than rush. But it also means that for those of us in Singapore, in Asia, you have to trade until 5 a.m. in the morning. The market will close at 5 a.m. Singapore Asia time, all right, not your 4 a.m. So most people cannot sustain this kind of time zone. They will just, boom, give up. They can't last that long, all right? I've been doing trading according to the US time zone. First 5 years of my life, I will just sleep, especially from November to April. I'll just sleep about 5 to 6 a.m. in the morning Singapore time. So if you can do that, congratulations, you're going to learn so much. Because I stay throughout, I watch the market, I watch CNBC. This sequence has never changed, and just let the live data influence my thinking, and I further do my analysis. All right, so this is really good. So with that in mind, how we're going to present our live stream is the same. What do I mean by the same? You have to find the most important news of the day and then see whether we have a match. All right. If there's a match, then congratulations. Then we are kind of headed in the right direction. But if there's a mismatch, you thought that another article is more important than the article I selected, then go through my sequence of thought why I selected this article to be the most important. And then you try to use the same reason to justify for your article which you feel is the most important of the day. All right. So step one, we found the most important article of the day that will influence the market. Step two, then we dive in to look for stocks surrounding that piece of article. That should be the way. Then step three, we go out there and fire the stocks. So between last Thursday, Friday, Saturday, Sunday, Monday today, including tomorrow, Tuesday, 6 days, I'll be firing out to you what we have done for the Spiking Alpha conference. Total 12 stocks that we are playing, right? 12 stocks is like mind-boggling. So, and I want to, make sure we are on a good shape entering to the midterm, entering to the inflation data announcement on Thursday. Don't go and rush into different stocks. So, with that in mind, now then I can present to you what is the latest in the market today. All right, here we go. And let's switch over to our Dow Jones index. Check this out. All right. What are we looking at right now on the Dow Jones index? We start off at the bottom left, 2020. And, on the right-hand side, the latest of the market right now. And very clearly, it has passed through a very important line. And this line is the $32,500 line. You see, I just drawn this red horizontal line. Please learn how to recognize how to draw such line. And we really gone through a lot. We went through the journey when Dow Jones kind of dropped to 30,000. Everybody kind of freak out. We were already calculating we dropped to 25,000, right? So we bungee down 25,000 and you have to bungee back up again. So right now from 30,000, it kind of bounced back up to 32,500. Then if I go to the 1 year chart,
you see something really interesting, right? Let me go back to 1 year chart again. Make sure you are seeing in a full picture. Oops. 1 year chart, zoom, zoom. And what did you observe? It is right now crossing a very important point, that is to break above the 200-day simple moving average line. All right. You got to really note this down. It has to break the 200-day simple moving average line. And this break is just waiting for two things. Number one, outcome of the midterm election. It shouldn't be a shocker. Americans are unhappy today. Things are kind of getting out of whack, and they cannot explain why the heck you need to support a war in Ukraine and domestically we are in trouble. Many issues, from the kind of roller coaster ride of the gasoline prices that they're paying to pump up their cars, to the expensive grocery items that they buy off Walmart. They feel the pain. All right. And of course, while all this is going on, the politics is the one that's disturbing everybody. I mean, there's two extreme camps, and you need the number one richest man on planet Earth to come in to buy up Twitter, to organize what he defined as the freedom of speech. Can you believe it? And this is like everything messed up. So the moment he bought up Twitter, President Biden proclaimed that, oh, you know what? Everything on Twitter are lies. That means everything he says is the truth. Everything on Twitter are lies. So, this is very confusing to me. And just because it's just like less than 1 week of change of ownership, and boom, the attack starts, all right? So all the activists, the extremists start to tell the advertisers, don't support Twitter. And Elon Musk really have to work his ass up, redefine the product and the vision. And the vision is really powerful right now. I want to show you this vision, and that kind of bring about very fierce debate. All right. I mean, this debate, I hope you guys can take part in the debate as well, because you start to ask some very primary question. All right. Primary question. What do I mean by primary question? All right. So let's take a look at the Elon Musk Twitter page. And officially right now, he's defined as the Twitter complaint hotline operator. And at different times of my business, I also feel like this, where I'm the complaint hotline operator, taking complaints from the people, right? So this is like, and the place where he is in hell. He's going through the most painful period of his life because he got so many things to juggle, right? So he called hell. Amazing. And if you look at his number of followers right now, he's number 2 ranking on planet Earth. Number 1 is Barack Obama. Oh my gosh, my cat is on hit. Muffin, shh. Shh. Today Muffin is on hit, so just bear with her. He's ranked, Elon Musk right now is ranked number 2 after Barack Obama. But very soon, all he needs to do is to make some tweaks. Boom, he'll be number 1. The most followed man on planet Earth at Twitter. All right. Now, I know this for a certain fact because even for my own Twitter account, the followers, it's like a stock market. It goes up, goes down, goes up. I say, who the heck is like following me and then unfollow me, then follow me, unfollow me? Who is so free every day, right? But that is the Twitter algorithm. So I'm going to go down right here, and then where's the particular tweet? All right. Yeah, this is the vision, the product vision or the mission statement. Well said. All right. That brings about so much debate. Look at the amount of debate that goes on here. 567,000 likes, 59,000 conversations, 70,000 retweets. Twitter needs to become by far the most accurate source of information about the world. That's our mission. All right. So I think this is one of the best written mission statement for Twitter. By far the most accurate source of information about the world. All right. Now, you can only have that provided you have like town hall discussion, robust discourse, debate, and fight it out. All right. So you can only have a proper discussion if you hear both sides of the story, not one sided. This is what traditional media is doing to us. One sided, you know, oftentimes the voice of the advertisers, the voice of the editorial team, and that's it. All other smaller nuances, they are not heard, missed out in the conversation. So this is really fantastic, right? So I'm showing you this because, he's like kind of rushing out before the midterm election, try to get the first iteration of the product sprint rollout. I'm not too sure whether he can pull that off or not. And I'm very, very sure after the midterm election, he's going to get Donald Trump come on board Twitter and all his followers will swing by and all that. Let's wait for outcome, okay? So, the most important article of the day today, I'm going to unveil to you right now, is none other than this. Here we go. The election could be a big tailwind for stocks heading into the end of the year. This is the one that you should be looking out for. This is the one. All right? Because if you don't have a catalyst or someone arguing for the fact that we're going to have a Santa Claus rally end of this year, you wouldn't put your mind to connect the dots. All right? So this is fresh. And we go down, look at the argument. All right? So I want to go through this with you really in detailed basis so that you don't miss out. So step one, on a historical basis, the sweet spot for the 4-year cycle is now. According to the boss of Stock Traders Almanac. I bought this book like for the longest time. Stock Traders Almanac, typically, at the beginning of the year, it's like kind of like a feng shui book for the stock market. I call it the feng shui book because it will tell you, wow, this pattern happened for 20 years, that pattern happened for 30 years and all that. All right, it's like very, very feng shui one. And they call it the historian, the Chinese call it feng shui and whatever you want to call it, okay? It's a well-studied phenomenon. The S&P 500 has tended to underperform in the year leading up to midterm election and outperform in the year after midterm election, especially in the period immediately after the election. And what is the period? What is this period after the midterm election? None other than our Santa Claus rally, the window dressing for all the fund managers of the world to tidy up their portfolio before they step into the new financial year. This is what we are talking about. All right, so how significant is this almanac? The average annual return of the S&P 500 in the 12 months before a midterm since 1962 is 0.3, significantly lower than historical average of 8.1%. That switches after election. In the 12-month period after a midterm, S&P is up an average of 16.3. Okay? The outperformance was especially notable in the period 3 months and 6 months after the election. So 3 months is like we're going to take like 8 of November, 3 months will be December, January, February, until February the 8th, which according to our red and blue box will touch like end of March, all right? So, and 6 months after election will be a 15.1% on average. And most attribute the reason for underperformance to policy uncertainty. This is what the heck we have gone through, which resolves after the midterm election. The prospects of the end of uncertainty are like the light at the end of the tunnel, and the potential for Republican control of the House of Representatives and maybe the Senate is sending signals that at the very least, higher taxes and more spending are unlikely. So we are all gunning for the Republicans to take back, Donald Trump to announce his presidential bid right after the midterm election, depending on the results, and that will shape the politics. And by then, Twitter will be ready for everybody come in to have a very balanced discussion. So I urge you guys, get your Twitter account ready if you want to write it, kind of take part in the conversation, all right? So to the extent that 2022 turns out to be a wave election for Republicans, check this out. The bigger the wave, the more impactful we think it will be for US equities in the short term and into next year. Also noted the post-election rally was broad-based. 3 months after the midterm election, the Dow, S&P, Nasdaq were all higher on average from 6.4 to 9.2. Going back to 1950, the S&P was 88.9% higher of the time. Wow, this is like power pack. And regardless of strong seasonals are not enough to overcome the macro backdrop of aggressive central banks and the prospect of a worldwide economic slowdown. We see no compelling reason to add risk despite the possibility of a bit more year-end upside. All right, so this part is the part that we go through this week. Wait for Thursday. And by the way, we're going to trade together on Thursday in the Cozy Live trading, so be patient. I'll be addressing this topic. And I think we're going to, for the first time, have the inflation dropping to below 8%. All right. I think Wall Street wants to see it at 7.9%. All right. So there you go. The most important article, which means we expect the market to move, right? So how do we connect the dots and cross-verify what this Amanda is talking about? Is it bullshit or is it real? How do we cross-verify? Is this all the bullshit or is this real for sure? Then this is where we connect the dots. Typically, I try to connect 3 different dots, like forming a triangulation. And I found the second dot, which will give us the impetus to think about, should we buy this stock or not? All right. And here we go. This is the cross verification signal. And check this out. Berkshire Hathaway operating earnings jumped 20%. Conglomerate buys back another 1 billion in stock. Mama, old man doesn't buy with his own cash unless it's dirt cheap. All right. So kind of, in a broad picture, affirm and connect the dots that, okay, old man also believes kind of we are at the bottom, price is cheap, but how cheap is cheap, right? So before I dive in, I'll open up Berkshire Hathaway and let you see. Now, he bought it in the third quarter, all right? So what exactly is third quarter means? 789. You have to start thinking like that, 789. And I try to spread out the month. And it goes like this. July, the start, 789, all right? And I want to lift this up a little bit so that y'all can really see it clearly, all right? 789. So let's start from the highest point. July, August, September to the lowest point. And this is the red box that Warren Buffett bought in Q3. 1 billion of this amazing stock called Berkshire Hathaway, all right? Now, all you need to do, don't overthink it. Some of you are very anal about such things, and the moment you become anal, then too bad for you, all right? You just have to visual inspection. Where's the halfway mark? Which is around here. I just visually move up, move down, and you see, hey, where's the halfway mark? Which is around here, and you move it around here means which is around today's price. You're buying about the price that Warren Buffett paid for, the average price. Okay? So if we are buying at the average price of what Warren Buffett is paying, then it gives you some sense, some confidence. Okay, fair price. He sees this as the bottom. And if I want to really find a real price, let me tell you, I think it's 425,000. Let me prove my point. All right. 425,000, I think is the real price he paid below. Because I will shift it back 2020 on the left. All right. 425. And I just adjust a little bit more. And you see 425 cuts all the important points. I bet this is the average price Warren Buffett paid for it or below. Now, if he bought it at 400,000, that is wow, he's like a genius, man. All right. So this will be the target price that we're looking at, 425. And he could also possibly buy at 400,000, right? Because this 400,000 also forming a very strong support line, and I can just do it another way. I do it this way. And you can see, all right. So this is the place where ding dong, he was buying back then, the 1 billion stock buyback. That is his range. So today you are just slightly above that. I mean, right now, price as I'm speaking right now jumped to 442. Right. Well, our viewers are very powerful. Immediately go and buy already. And the price, boom, straight jump already. Jump to 441932. All right. So this is a very important signal to cross-verify what we said about stock traders almanac, about year-end rally, connect with what Warren Buffett feels. Are we at the bottom of the market price for him to introduce and execute a stock buyback? Okay. Now we go down right here and kind of study the article. All right. So you can read all this, but I want to go to the most important point right here. He spent 1.05 billion in share repurchase during the quarter, bringing the 9-month total to 5.25 billion. The pace of buyback was in line with the 1 billion purchase in the second quarter. Repurchases were well below CFRA's expectation, as analysts estimated it will be similar to the 3.2 billion total in the first quarter. All right. And he did post a net loss of 2.69 billion in the third quarter and so on. All right. So all these are like standard, don't have to panic. And while I'm talking about this, the headline posts out stock rise to start the week as investors await midterm election and inflation report. The market has just opened up. Now this is the official opening bell, 10:30 p.m. Singapore Asia time, 9:30 a.m. Eastern Standard Time. All right. So the chart is shown up there. And we spent some time talking about this stock that was featured here, Occidental. And, this is one of the thinking that we have at the Spiking Alpha conference. That's it. This is good enough today to kickstart the new series of our YouTube. And I call it the best investing strategies for inflationary times. All right. So let's sum it up. Number one, those of you who are on our Don't Stop Believing Trade notification, you expect your WhatsApp to start ringing like crazy after this. All right. We're going to send out to you what we covered on the Spiking Alpha conference, the stocks that we are looking at. But for the analysis, you need to be a subscriber of the Spiking Alpha conference. Then you get to watch the recorded video. If you need help, just drop a WhatsApp message to our angels and they'll be able to assist you. Number two, Tuesday, midterm election results will be out. Thursday, inflation data will be out. Don't rush. This week, don't rush. In any case, I'll be trading with you guys on Thursday at the Cozy Live Trading event. So just go through it, relax. Lots of opportunities this season. We just need to have the affirmation inflation is going to drop below 8%. I think it's going to hit about 7.9%. If it's really good, 7.7%. All right, then the market will have a big rally on Thursday. And then we cross-verify that against what Warren Buffett is thinking for Q3, and we kind of connect the dots. Yes, I think we kind of hit kind of a soft spot at the bottom. Are we going to get worse? Don't know. This is the most favorite question that students love to ask me. I can't give you a magic crystal ball, but I think from all this that we analyzed so far, one big factor is that nobody seems to be talking about is that the US cannot afford to lose right now when China is rising up. They cannot show any signs of weakness in the market. The moment they drop, what they've given away is for China to overtake, boom, just like that. And to demonstrate to the world a centralized political platform is more powerful than a democratic platform. It is shame to the Americans for messing up the economy worldwide. So I think that's the thought I want to trail, and let's see how the US politics will play out, how the stock market will play out. They should eventually win unless they give up the fight to the Chinese. With that in mind, thank you so much for participating in tonight's first live stream of a new series called the Best Investing Strategies for Inflationary Times. And please join me again tomorrow at the same time, 10 p.m. Singapore Asia time. I look forward to chatting up with you guys again. Thank you so much and have a great night. May God bless you. Good night, everybody.